What's going on, everybody? Aaron Trevino here, back with another wonderful guest. We are with Matt Jones. How you doing today, Matt?
I'm doing fantastic. How are you?
I'm just fine. I know we've had this in the works for a bit, and I'm looking forward to our conversation. So thank you again for coming on.
All right, sounds good.
Yeah, absolutely, Matt. So for those of us who aren't too familiar with you, would you introduce yourself, please?
Yeah, certainly. So I started investing in 2015. I bought a small multifamily properties myself, but it was just going so slowly until I learned about real estate syndication, and that kind of solved all my problems for me. The ability to scale without having to use my own money or my ability to save up my own money to buy the next place. And so I took just a deep dive into that, invested passively into several syndications. And most recently, I've co-sponsored a 228 unit deal. And then I'm looking to raise capital and be a GP on future deals as well. So right now I own 55 units of multifamily and 244 beds of a senior assisted living.
I
I
love it.
also,
I love to hear it.
yep. And I also wrote a book about real estate, which covers like the whole spectrum of real estate investing. I co-host a podcast, Builders of Wealth Creation, and then I'm also planning a real estate conference.
Wow, you really got your hands full, don't you?
Yep, try to be anyway.
Yeah, no, I love to hear it. And, I'm curious as well, kind of, I guess in terms of, it sounds like you kind of had a mentality change as well. Maybe you had this preconceived notion of, hey, real estate's done this way. And then eventually you kind of transition to, hey, the syndication model. So was there any particular moment where you really adjusted your thinking or kind of had an aha moment?
I would say the biggest thing is when I realized that I couldn't do it all on my own if I wanted to achieve my goals in a timely manner anyway. And so I had to take a nice big slice of humble pie and start networking with other people and teaming up with other people. And the mindset, like you said, is the biggest thing, really. It was Henry Ford who said, whether you think you can or you can't, you're right. And that's absolutely true with multifamily, with scaling up to bigger hundreds of units of properties. If you think you can't do it, you're absolutely right. You're not going to do it. You're not going to even try to figure it out. But if you think I can do it, I now need to go figure out how I can do it and meet people and learn from people who are already successfully doing it. And then you're going to take actions necessarily to be able to do it at that point.
Absolutely. No, I guess no pun intended with Ford, but yeah, you don't want to reinvent the wheel, right? But yeah, I mean, really just, going with people who've been there before, who, have gotten the reps in as well. And, it's neat that you came to that realization.
Yeah, I mean, in school they teach you not to copy off other people. That's cheating and wrong. But in real life, and especially in real estate, you want to copy what other successful people are currently doing. And there's so much sharing of knowledge right now that more so than there has ever been. So the more you can learn and copy from successful people, the more successful you'll be yourself.
Yeah, absolutely. And you drew an interesting point on kind of, copying people. If it's a proven method, you may as well do that. And then also about the knowledge and, maybe information as well. We're in the information age. We're being bombarded by information every given second of our lives. How are you able to kind of filter that out and really focus on what you're doing?
Well, I think the more niche you are in real estate, the better. So the more focused you are at specific things, because I mean, there's a million different ways to make money in real estate, and if you try to do them all, you're going to do them all very poorly. But if you're the more focused you are, like a specific task or a role within a certain you know style of real estate investing, and you narrow it down and just hyper focus into becoming the best person ever at that particular thing, that's where you're going to make the most money, because you're going to be able to add value to other people's teams to be like, hey, I'm the best person when it comes to this thing. And so they're going to want to team up with you, and you'll have access to deals and great people to work with.
Sure, absolutely. And it also kind of sounds like at least a degree of self-awareness is needed, right? I mean, you even said, hey, if you try to do it all, you're going to be, maybe either bad or mediocre at all of them.
Mm-hmm. Yep, exactly.
Yeah, absolutely. And, I know you mentioned how you said you started in 2015, right?
Mm-hmm.
Yeah, 2015, I guess, you were learning along the way, found out syndication. And I'm curious if you wouldn't mind explaining, what was your first deal like?
My first deal in 2015 was a live-in triplex. So I lived in one unit and rented out the other two. So house hacking, which was before I even learned the term, that's what it was essentially. And so I did the property management myself. I was my own cleaning person and repair person, and it just took so much time. But I learned a lot at the same time.
Yeah, no, absolutely. I guess, it's one of those things. There's no way to learn aside from doing it yourself. And I'm curious, how did you were you actively hunting for deals yourself in your area, or were you open to other deals in other cities as well? Or
I think that's another mindset thing. When I started out, I was only looking for deals around me where I could physically see and go over to if I needed to. But I think with today's technology, also when you have a local team wherever you're investing, you don't need to physically be where you are. And the bigger the units, the bigger portfolio that you have, you can't physically do everything. So you have to have a team. So, I like other markets. As I live in Minnesota, but I don't really invest in Minnesota anymore. There's just better places that you can get more bang for your buck. And so I focus on other markets that I like, and then I build up local teams of people to help look for properties and property management and brokers and local lenders and such to be able to get the deals done that I want there. So, but my mindset in the beginning was like, oh, I need to be here physically to see it in order for it to be real for me.
sure, no, absolutely. And again, I guess as we spoke about earlier, that's the mindset shift, right? Had we been doing real estate, 50 years ago, that wouldn't have been a reality for you, building out teams and other places you're not familiar with. But it's interesting how technology is really helping us bridge the gap.
Yep, exactly.
Yeah, and I'm curious as well. It kind of seems like, people would poke fun at the real estate industry as being kind of the most, I don't know, technologically antiquated. How are you incorporating technology in your real estate business?
Well, so I keep it kind of simple. There's a lot of tools out there, but the simpler, for me anyway, the better. So, like my underwriting is all through Microsoft Excel. I have brokers that email me deals, and then I, screen them, take a look at it, do a little deeper dive with underwriting when needed, and then of course property management. Depending on what the property manager I use, like there's different software programs and then Syndication Pro is a great resource for doing client relations, specifically with different deals. So my investors invest through Syndication Pro, and then all the communication comes through there and such. So that's really convenient in that sense. And then I have a CRM. I just use MailChimp for sending out emails to my network. But that's pretty much it. I mean, there's a ton of other awesome technological things and apps and stuff like that. So it really just depends on what you're actually going to use. But I find the simpler you make it, the better.
Yeah, absolutely. There's no need to overcomplicate anything. And I'm curious as well. I know you touched on it briefly, but maybe for those of us who aren't familiar with the word syndication or what a real estate syndication is, would you be able to describe it for us?
Yeah. So a syndication is where there's active investors and passive investors together, taking down bigger deals than any of them could on their own. So there's, the active side is what's called the general partnership or sponsors, and they put the deal together. They find the property, they underwrite it, they get it under contract, they find the lender and get the financing ready, and then they raise capital from investors. And then the passive investors, they're just completely passive. So they, decide whether or not they want to invest in the deal, and then they wire the money over, and then they split the profits with the general partnership. So based on like however much that the passive investors invested, they get their portion of the profits from there, and they also get equity ownership usually into the property itself. So they get all the tax benefits that comes with real estate ownership as well, but without getting any phone calls. So the tenants don't even know that those limited partners are part of the ownership.
Yeah, I know that, for a lot of people, especially busy professionals, or maybe someone who's doing it for the first time, that can be music to their ears, right? Because, when someone says real estate, maybe you clam up and think, hey, am I going to have to unclog the toilet at 3 in the morning, right?
Yeah, exactly. And actually, I'm providing, or I'm preparing to provide an even better layer of protection for my investors. I'm looking at starting a fund where I have investors who invest in my fund, and then I find the general partners and the deals and vet them all on behalf of my investors. And then I negotiate with those general partners for a little bit better rate of return for my group. Then, so my investors, by investing through me, they get better returns than they would if they invested directly into the syndication. But at the same time, they still have equity ownership in the deal as well.
Okay, yeah, I definitely see how that could be a nice approach as well. And it kind of seems like both models, it's pretty hands off for the most part.
Yeah, that's when I first started, I was fixing the toilets, but I find that the less of that I do, the better. I'm not the best at those things, so it's better that other people do that on my behalf. Even though I'm paying property management to do it for me, they're going to do a better job and do it cheaper than me trying to deal with the hassle myself.
Yeah. And I'm curious, maybe a dumb question. I don't know if I've ever asked this, but would you ever go back to also, maybe having your fund syndications and then also, doing those smaller deals, or really you're looking to stay?
No, because honestly, like putting together 100 unit deal is not that much more difficult than putting together like a duplex. Like you still have the same amount of underwriting, you still got to get the financing lined up and gather the funds. And there's more legal aspects, I suppose, but you have a lawyer draw up the paperwork for all that stuff. And then but there's just so much more profits in the larger deals. And the time for per profit, sort of thing, the ratio in that sense, you get a lot more benefit and reward from those larger properties. So I would not personally go to the smaller properties again. But granted, like you can make money, like I said, in any kind of real estate venture. So it just depends on what your interest and your skill is. So if a listener out there really likes the small multifamily or single family or whatever, and you're doing really well at that, that's perfectly fine. Nothing wrong with that. Just not for me anymore.
Yeah, no, absolutely. And I find it interesting as well as that, there's so many different facets of real estate. And at least for me, I've in the past, I've had a tendency to think that they're all vastly different, but if anything, there's a lot of commonality between them.
Yeah. I mean, single family is a lot different than multifamily, because with the single family, you've got people that are buying the house for their family and such. So there's a lot of emotions that go into the single family purchases versus the large multifamily. It's all about numbers and it's got to make sense financially.
Yep, that's right. No, it's all about the numbers. And I just thought I'd ask you that because I know someone who's done syndications as well, but he kind of offered the same answer as well. Was that he still does the larger deals, but occasionally, if it comes along, he'll do a smaller one too.
Yeah. Yeah, and it just depends on what you're interested in, and it's almost a distraction for me anyway to do any small stuff, because you think about like this with single family properties or like duplexes and such. If you're going to hire a property manager for that, it takes about 10% of the gross income to pay for the property management. But if you have 100 unit or more, it's 4% or less of the gross profits for the property manager. So it's just more cost effective to go big. And versus like the smaller stuff, it's harder for it to make sense to hire a property manager for. So if there's not a room in the profits for it, then I'm doing the managing myself, and that's I'm not the best one for that. I'd much rather hire that out. It's just
Yeah,
easier to do with larger stuff.
Matt, and I find that interesting as well. In a way, it sounds counterintuitive, right? You even said it pays you more to go big, right? Or it's, I guess, worth your time and worth your money to go big. I'm curious, like, how are you able to transition to that mindset? Because I'm assuming starting out, you didn't always think that way.
No. I starting out, I thought like, okay, I bought a triplex, and now I got maybe buy another triplex or a fourplex, and then 1031 those into a 10plex or 15plex, and then just keep on slowly graduating up through the levels there. But what I didn't realize was you can just jump in. And actually, I have a friend who his first real estate deal ever was a 120 unit deal
Wow.
as a general partner, putting it on. So It can be done. I've seen it done, and this guy, it's not like he's a genius or anything like that, but he's a really great guy. But so if he can do it, I can do it. Anybody can do it. It's just a matter of teaming up with people who already know what the heck that they're doing. So if you're coming into this and you don't know how it's done, then you got to add value to other people who are already successful with it, so that you can join in the team for the next deals.
Sure, absolutely. Maybe someone's already working in real estate. They conceptually have an idea of what a syndication is, or maybe they have a bit of cash they can invest. They don't have the time. How can someone get up to speed to even understand all of these things, understand what's going on?
Well, there's a few different approaches. So you're talking about education. I mean, there's lots of free education out there, so they can listen to podcasts like yours or mine, or many other great ones out there. They can attend webinars or go to meetup groups in their local area, or local real estate investment association, or go to conferences, and lots of great books to read also that you can either get from the library or off Amazon.com or whatever. And if you really want to get serious, then I recommend hiring like a coach or a mentor, or joining a mastermind group where you're going to get just an upper level sort of training and experience, and access to a better quality network than you could just winging it, I suppose. So it just depends on how serious you want to get. It's good to start out with the free sort of education first to kind of dip your toes in the water. But at a certain point, if you want to get serious and if you want to scale up quicker, uh, you got to sort of pay for it. Now, granted, I want to warn people, there are a lot of gurus out there who they just want your money, and they'll give you their system, but they are not currently successful. So if you're going to learn from somebody, it needs to be somebody who's currently successful doing what you want to learn how to do.
Absolutely. No, that there's a lot to be said for that as well. And I'm curious, maybe someone has the approach of, maybe they live in Minnesota, they're looking to do deals all around the country. Maybe someone wants to work only in their state, right? If they live in the state of Texas, do you suggest they join a group, of people in the state of Texas or nationwide? Or if you're looking to do a real estate deal for the first time, should you focus more so on the region that you're in?
It depends on what region you're in. I mean, some regions are terrible for real estate investing. And so, but if you happen to be lucky enough to currently live in a great market, then by all means focus on your local market. But if you're not in a great market, then you sort of have to start looking elsewhere. So it depends where you are. And I would say different areas have, there's different asset classes within real estate. So like one area might be good with multifamily, but bad with like warehouses. And another, market might be the, vice versa. So it just depends on what your asset class focuses and where you're living now.
Sure. And I guess for you, for your syndications, do you find certain states or cities that you like working in, or?
Yeah. So when I started to look at syndication, I assessed a whole bunch of different markets out there, different cities, and I looked at different criteria that I really wanted out of syndication, or like a multifamily market. And I narrowed down like the Carolinas, especially North Carolina, like Raleigh, Durham, specifically within North Carolina, I really like, but also like Tennessee, Kentucky, and then just really the south eastern United States for the most part. There's certainly areas there that I don't care for, but anywhere with like a metropolitan service area of 300,000 or more people is what I really like, because like that's where you're going to have access to multiple different property management companies that can handle the size of properties that I look for.
No, that's an interesting distinction you made. I would have thought that it would have been something like, oh, well, because of job growth, or maybe that's also a factor, but you
Yeah.
mentioned how you're looking at population size and the ability to have someone support the types of properties you're getting.
Yeah, yeah. You don't want to be stuck in like a large or like a small market where there's like only 10,000 people in the town and there's no great big cities anywhere near. Like maybe there's one property management company in town, and what happens if they suck, and you have to fire them? What then are you going to do? I mean, so you you want to be in an area where you have options, not only with property management, but with tenants and contractors and all that kind of stuff. But jobs are another great factor as well. I mean, there's lots of different things to look at, but those are certainly a few.
Sure, absolutely. And I'm curious as well, really, how these past, I guess, there's so many changes going on really in the world, in the economy. We have inflation, we have lumber costs, we have the cost of living going up. How are you able to adjust that when doing or I guess take that into account when you're doing your syndications?
Well, if I had a crystal ball, I would look into that. But since I don't, I have to conservatively underwrite. So when I underwrite, I plan like, okay, if a recession happened and we get to the historical high rates of vacancy and high rates of concessions and things like that, is this property still going to cash flow enough that I can ride out the low times? Am I going to be able to keep the property through a recession at the price point that I'm at? If yes, then I'm going to put out an offer in on that property. But if it's like, if it's going to go for too high of a price or there's just not enough wiggle room or meat on the bone, then I pass on those properties. And the vast majority of properties right now are crap. So you really have to be selective and conservatively underwrite for it to make sense.
Yeah, and it's funny you mentioned that as well. I guess talking about conservatively underwriting, and it reminded me of a friend of mine. He told me this years ago, and he said, Aaron, you can make more money saying no than saying yes.
Mhm. Yeah, it's better to not have a deal and just keep looking than to get it into a deal just for the sake of having a deal and it turns out to sink you and your investors. I absolutely don't want to lose my investors' money. So I only look at properties that will actually be able to work out financially.
Sure, absolutely. And in terms of unit count, I know you mentioned a bit about you like the Carolinas, you like
Mhm.
300,000 or more people, property management groups. Is there a certain unit type or I guess range of units you're looking for?
Primarily now I'm only looking at 100 unit pluses because that is a point at which you can hire full-time on-site staff. So for about every 100 units, you can have one full-time leasing person and one full-time maintenance person. So if you have 200 units, then you can double that. But it depends on the market. Like a more expensive market, maybe you can get away with like 75 units to be able to have two full-time staff. And then also you have more of the economy of scale. So when you're renovating the place, you can buy everything in bulk, all your appliances and flooring and paints and all that. And then your contractors who are rehabbing the units, they really get into the swing of things. Like, they got things down pat with like, okay, it's all the same finishes, all the same appliances and hooking things up. And they can really turning the units that way.
Wow, there's a lot to be said for that too, right? Because I mean, if maybe you have more units to do and you're doing the work, you're motivated to do it in a timely manner, especially if all the finishes are the same, right?
Yep, exactly.
Yeah, absolutely, Matt. You've done a great job of explaining, what syndications are, kind of your role in it, what you're looking for, different markets. Is there anything you haven't said that you really just like to hammer home for us?
Yeah, I would say that if you're looking to get started in real estate, or if you're looking to change real estate, I mean, you just have to decide on one specific thing, one specific asset class, and one small role within that asset class. Because the more diversified you try to be with different things, the worse that you're going to be at. So like, decide what you want to do and then do it. I think it takes three major steps with real estate. You've got to educate yourself, you've got to network with other people by adding value to them, and then thirdly, you just got to take action. Because even if you're finding a deal that's only a base hit, it's better to do that. If you're waiting for the home run, well, right now there's not that many home runs, but just like take action just to get going.
Yeah, no, there's a lot to be said for that third one, taking action and getting a base hit as opposed to just doing nothing, right?
Mhm. Exactly.
Yeah, absolutely, Matt. So for those of us, maybe we're in Minnesota, maybe we're in Texas, another part of the country, or we just want to get a hold of you and talk some syndications or multifamily, where can we find you?
Yeah, you can go to my website, hawkwingcapital.com, and then you can set up to have a call with me. I have a free chapter of my book you can download if you want to check that out as well.
All right, Matt. Well, thank you so much. It's been a pleasure being able to chat with you, learning a bit more about you, maybe how you first started, bit about syndications, and really enjoyed our conversation.
Thanks, Aaron. I appreciate it.
Have a good one.